Dalia Barsoom, Streetwise Mortgage. Thanks for joining me.
Thank you, Patrick.
So we've got the R4 conference coming up in the 25th, 26th, I think it is, and you're going to be there. And, you know, as a part of some conversation leading up to the conference and for listeners to get to know you a little bit and why they need to come to the R4 conference to hear you speak, I want to talk about a couple of different topics, if you will. And where should we open this up? We in part of our notes, we have seller financing and what is the impact? Because investors often will look for seller financing. It's a way to kind of work around some of the mortgage qualification process. But what happens if you have seller financing and you're talking to the bank at the same time?
So seller financing is one of the topics I'm going to talk about, and the focus of my talk at the conference is going to be about the money trends that I'm seeing these days and how investors can benefit in the period ahead. So seller financing is one of them. We're seeing more and more deals where the sellers are offering vendor takebacks.
Yep.
In the commercial world, which are 5+ units, and then in the residential world. And it's a fantastic way to buy with less money in the deal, but there are implications if you want to marry that type of financing with bank financing. So that's what I'm going to focus on at the event.
You're going to focus on that.
Yes. Explain what do you need to keep in mind and how do you structure it correctly?
So it is a viable strategy, and is it more viable or is it more effective, right now, given what's happening with financing?
It's always been there, and it's always helped investors buy with less in the deal, and that's where its effectiveness comes. And right now also it's effective in the sense that it is a cheaper way to get money compared to private money, because with a seller you can negotiate better terms. There are no broker fees, there are no lender fees, and you have more flexibility. So that's an advantage right now because the cost of money has gone up. But again, there are implications to plugging it into a deal with a bank mortgage or a CMHC mortgage. And the implications are different depending on whether we're talking about a 1 to 4 units or a 5+ units.
Beautiful. And you're going to really unpack that at the conference. Is that what I'm understanding?
Yes.
Beautiful. Okay. So then the next topic you're going to talk about, and I don't know if I'm putting it in the order that you want to speak to it, Dalia, but you use the term new kids on the block. And do you want to give us a little bit of a teaser of what that is all about?
Yes. So the new kids on the block is a new investor-friendly lender that has come into the broker channel. That they're not a kid at all. It's just a fun way of introducing the topic.
Yeah.
But yes, a new investor-friendly lender has come to the broker channel. And I want to give investors an idea about why they should consider this lender for their portfolio and what are some of the benefits going forward, including saving on interest rates, which, at this point, wherever you can save, you should save, right?
Yeah. So a couple of amazing topics to dig into because there's a lot there for investors to understand. And it's these little kind of subtle, not so subtle nuggets that can really make the difference between moving forward on a deal and not getting that deal done. And then I know that you're kind of on the fence about CMHC, whether you're going to have enough time to talk about it. Do you want to give us some insights into the topic of CMHC financing as investors kind of seem to be tending to gravitate that direction? Give me a little bit of information on that.
Yes, so I will definitely talk about CMHC financing. It's just how far am I going to go with that, because it's available for purchases, refinancing, and new construction. So I'm going to cover purchases, refinances, equity takeout, and I'm going to park new construction for now. But I'm still covering CMHC. And what I'm seeing right now is a trend where investors are going into larger asset classes, 5 units and above, because there is still healthy money to be made there. And believe it or not, the cost of money with CMHC is cheaper than residential mortgages right now. So I want to talk about the CMHC new program, MLI Select, and how investors can benefit from that program, because it does offer an opportunity to buy or refinance up to 95% of the value and can offer extended amortizations up to 50 years amortization. So I'm going to dig a little deeper into how to qualify and how do you package your deal to increase your chances of success when you go to CMHC.
What I love about all of this, Dalia, is, as an investor-focused broker, I mean, you've got a ton of experience. And on top of that, you're in demand in terms of your speaking, and because you bring so much value to the stage for the audience that you're speaking to, which, they are trying to grow a portfolio using, investment in real estate. And so when we look at what's going on in the market today, a little bit off topic about the event per se, but it's more about when you look at what's happening with financing today, it's challenging is what we hear. But when you have a conversation with somebody like yourself, when you're seeing what's going on with financing from your perspective, is it more challenging but doable? Is it like really hard lifting and, I don't know why we bother? Like, where's the kind of temperature that you're seeing of what the lenders are doing and even what the investors have to face? Are they really having to put their shoulder into it?
So I can, and this is not news, qualification on the residential side has become tougher because the rates have gone up. Having said that, we are strategy oriented. So we're always finding ways to fit the deal under the new rules. That's the mortgage game. We always have to work with the rules and maneuver. And this is where we guide clients. Do this in order to, be able to do this. Do that in order to go here. And that is still happening today. So qualification is still happening on the residential side, but it is a little tougher and takes a bit longer. On the commercial side, it's not as tough as the residential side because the cost of money is cheaper, but it's a longer process because it's a commercial deal. But in either sandbox, investors are still doing business and they're still getting mortgages, and it's a numbers game. It's a numbers game at the end of the day.
One of the things, you've been a trusted partner of the Real Estate Investment Network for a long time. We, really appreciate what you bring in terms of your experience. And when you kind of consider that commercial side, and it is, it's more lender friendly right now, and, or the residential side, which is less, that's always that kind of pendulum swing when it comes to financing, but you also really sit down and talk about a plan, because this is something that I think most investors don't really take the time to consider can they sit down? They need to sit down with somebody like yourself and put a plan together so that you're executing against a plan that you can actually achieve the result you're looking for based on actually having a plan. Is that an accurate way to say it, Dalia, or how would you say it differently based on the work that you do?
Yes, the plan is the key. The financing map, the strategies on how we're going to structure money and how we're going to go about it to enable your success, given what you're looking to do as an investor, is really what it boils down to. It's not about, hey, I have a deal, get me a mortgage, and then when the time comes to buy again, I'll come to you for another mortgage. That is the old way of thinking. The more effective way of thinking that helps investors scale and avoid the mistakes and save money and utilize the best sources of capital is planning, to sit down and plan. And that's what we do with investors. And we look holistically at a portfolio, whether they have residential or commercial. We look at things holistically, whether they have a residential and they're looking to move into commercial. We help them make that move and plan for it. It really boils down to a planning conversation and a strategy conversation.
That's fantastic. So, folks, the R4 conference is coming up. Dalia is going to be there speaking. And if you can't make it, understood, but you definitely want to make sure that you're reaching out, having a conversation with Dalia, putting that plan together so that when you're going for your financing, in advance, you're prepared, you understand what it is that you're looking for and what you need to qualify and how you can move forward against that plan. Dalia, anything you want to add before we sign off? Because there's some great insights in this, and it's been great talking to you. But is there anything? How would you like to have the final word?
I would say, as always with the rain events, I am excited personally to be part of that event because there is always something timely to learn. And I would invite and encourage others to join this conference because the market is changing. There is a lot of fear out there, but in the rain community, there is always perspective, and there is always seeing, the like helping you manage the risks, but also see the opportunities. And that's the goal ahead of us, in my view, seeing
Yes.
how we're going to tap into these opportunities ahead. So I'm excited.
Well, you know what I love about this particular conversation is you're talking about actually moving forward and doing something. The headlines, of course, are talking a lot about the speculators that are running into problems, and now the bad decisions that they made and the FOMO decisions they made, those emotional decisions without a plan, are sadly coming back to kind of haunt some of them. And that's what's hitting the headlines. And I know some people are sitting on the sidelines thinking that, the sky is falling when in fact it's not falling. You just have to approach how you get financing differently and more strategically, to your point, and then working with somebody that actually understands what's going on. So, Dalia, thank you so much for your insights and for your time.
My pleasure. Thank you, Patrick.